As a business owner, you want to keep your finger on the pulse of your business, but what indicators do you need to monitor in order to understand your business and your money so you can keep the show on the road?
Welcome to the Business Lessons in Denmark podcast. Our podcast gives the answers to your business-related questions that have not been answered yet or things that haven't even crossed your mind. My name is Adina Bohos and I am here with my colleague Katalin Balog. We are owners of Cool Account CPS, a Danish accounting office. Hi, Kati. We didn't start this podcast to train accountants, but to give business owners and future business owners basic information and knowledge necessary to succeed with their business.
That's right. Clients sometimes come to us with situations where things went really astray, and these major or minor disasters can almost without exception be traced back to the fact that the client didn't know something about laws, rules, finances, or taxes. And because of this, they did something they shouldn't have, or they didn't do something that they should have, and so on.
Yes, nowadays it's simply necessary for a business owner to have some understanding of the laws, taxes, finances, and the main economic concepts. Without this, you are in danger because you are trying to navigate your ship on the stormy ocean without a compass.
Yes, or without being able to steer the ship. And when things go astray, it can cause a lot of headaches, distress, sleepless nights, not to mention financial loss.
Yeah, that's right. So far, we have already discussed a lot of legal and tax basics. I thought it would be good to review some financial key concepts that every business owner should know about and use.
Great. I'm in.
Okay, then let's start. If I am a business owner, I should somehow monitor the performance of my company in order to be able to steer that ship in the right direction. From this point of view, what would be the most important for me? What is the financial concept or indicator that I need to follow to know if my business is moving in the right direction? Sure, my bank account balance would be the best indicator, right?
Yeah, your bank account balance, in other words, the money in your bank account is really a good indicator. 1,000,000 crowns in the bank account is much better than 100 crowns in almost all cases.
In almost all cases, well, I think it's much better in all cases.
Yeah. But the fact is that the money in the bank account as an indicator can be tricky because part of that money is usually not yours. As we talked about this already in an earlier episode, one has the money in the bank account, but only temporarily.
Yes, I think you mean the VAT, moms in Danish. We went through this in our episode number 13.
Yes, the money is for the VAT, but also for other things. A part of the money you earned will be needed for your taxes. Maybe you will have to pay salaries from it. You may have to pay your creditors from it. So actually, only a fraction of the money you have in your bank account is actually yours. Therefore, it's true that the money in the bank account is an indicator, but you should be careful with it.
I understand. But then what would be the indicator in which I can trust my company's sales revenue?
Yeah, your company's sales revenue or turnover is a good indicator. It sounds quite different when a company has a turnover of 10 million crowns in a year than when it has a turnover of, let's say, 100,000 crowns.
Just to make sure we understand this turnover or sales revenue correctly, this means the amount for which I sold my products or services, right? Without VAT, of course.
Yes, exactly. turnover or sales revenue is the amount of sales without VAT. If on Saturday you sold 100 portions of goulash soup for 50 crowns per portion, then that evening you receive 5,000 crowns. But since this amount also includes the VAT, your sales revenue is actually 4,000 crowns.
Okay, I think sales revenue is a very good indicator, because if on Saturday I make 4,000 crowns in sales and on Monday only 1,000 crowns, then this clearly shows that on Saturday there were more guests. I sold more food, so my company did better on Saturday than on Monday.
Yeah, it's true. But the problem with this indicator is that in itself, it doesn't show if your company is going in the right direction. What if a portion of goulash soup brings you 40 crowns in sales revenue, but it actually costs you 60 crowns to produce? If you count all the costs of raw material, the beef, the potatoes, carrots, onions, the salaries of your chef and waiter, the rent of the venue, heating, insurance, advertising expenses, and so on. But if it turns out that your costs were significantly higher, so you actually lost money, despite your impressive sales revenue.
Well, in this case, it's actually me who pays the guest to eat in my restaurant.
Yeah.
So the more portions of goulash soup I sell, the more losses I produce for myself. So this is really not a very good deal unless I'm running a charity.
Yes, that's right.
Okay, so should I rather look at if I win or lose on what I sell? I'm thinking that it's no use for a company to have a sales revenue of 10 million crowns if it has expenses for 12 million crowns, since then it has a loss. Another company that has a sales revenue of 100,000 crowns is actually doing better if it makes a profit, isn't it?
Well, which one would you choose? A company with a turnover of 10 million, which generates a loss of 200,000 crowns for you, or a company with a turnover of 100,000 crowns, which generates a profit of 20,000 crowns?
For sure, I would choose the company with a lower turnover, but with a profit. And I think I'm not alone in this.
No, you are not, because I would choose that too.
Then we are in agreement. So can we conclude then that a good indicator of how my company is doing is my profit or loss?
Yeah, we can definitely do that. But
I know there would be a but here too.
Yeah, well, only that the profit is a short-term indicator. I mean that the profit or loss shows your result in a given year. But when we talk about a business, we typically think in a longer term, 10, 20, 50, even 100 years or more.
Are you implying that even though my company had a profit in 1 year, I can say that my company is doing very well if it has a loss in another year and again in the next year?
Yes, exactly. A profit or loss shows something about 1 year. But since companies are typically creatures that live longer than 1 year, it's an indicator that has its limitations.
Then we would need an indicator that is better.
Yes, and fortunately, there is such an indicator.
Wow, and what would it be?
It is the concept or indicator that is called equity capital. This can be found in your company's balance sheet, which your accountant prepares at the end of the year or perhaps even quarterly.
And what does this mean?
You get the equity capital when you subtract the liabilities from the value of your assets. If your company's equity capital is positive and keeps growing over the years, it shows you that, yes, your company is moving in the right direction.
Okay, and what if it is negative?
If your equity is negative, it means that your company is in debt. If you have a sole proprietorship, even if you have a profit, if you take too much money out of the company during the year, then your equity might turn negative.
So negative equity means that there are more debts than assets, right?
Right, exactly.
Okay, so let me summarize this. If I want to see if my company is doing well, I should monitor the following things. First of all, if there is plenty of money in my bank account. If so, that's very good, but in itself, it doesn't show everything. To be successful, I have to sell my products or services, so I need a lot of sales revenue. By monitoring the sales revenue, I can see if I have enough sales, if my company is growing. If yes, then I can give myself a pat on the back, but that's still not enough, because I also need to see if I have any profit at all. Mm-hmm. If I have, then it's time for me to cool down a bottle of champagne. But that's still not all, because I also have to check if my company's equity is positive or if this equity is constantly increasing.
Yes, exactly. And if you can answer yes, even to that, then you can for sure take out the champagne from the fridge and the champagne glasses from the cabinet. Just please invite me for a glass of champagne too, because after all this talk, I feel that I really deserve that.
Okay, I will invite you, no question about that.
Thank you. You are a nice person.
Oh, thank you. Well, it's time to finish for today. Thank you, Kati, for describing these economic indicators. We also thank you, dear listener, for listening to us. Next Monday, we are coming out with a new episode. See you then. Today's episode was sponsored by Cool-Account CPS. Cool-Account CPS can help with starting your company with bookkeeping and tax matters. In addition, we also provide business and financial consulting. If you don't want to miss useful and up-to-date information, follow us and like our Facebook page. You can contact us via our website, www.accounts.cool. We wish you a successful week.